This just in, the latest property market data has been released. In this video, I'm going to go over what markets are the winners and what markets are the losers. Never has the Australian property market been so diverged than right now. Some markets are booming while some markets are still sinking. Now what you have to keep in mind before I get into this data is all the issues that have happened since March haven't been felt yet because of the government stimulus and the government covering up all the problems. So keep that in mind as I go over the data. Now what you have to keep in mind is these are just averages for example, Melbourne, Sydney, but every suburb has its own market. Prices on average could be falling in Melbourne, but some markets could be rising while others fall more than the average. Also, what you have to keep in mind, and this is not a normal property market because there's not much supply, so we don't have as much data to go off. Okay, let's get into the data. So CoreLogic on Thursday reported house values in Melbourne slid by 0.9% after a 1.4% drop in August. So this is pretty alarming. House prices are continuing to decline in Melbourne and they're down about 5.5% since March. And this is with the real estate market pretty much shut down. Prices are still sliding and also supply has been extremely low. So I do expect more falls to come in Melbourne. It's definitely not looking good, but there could be areas where it's falling more than this and there could be some affordable areas that may not fall as much. It's a similar story for units in Melbourne. Values fell by 0.6% in September to be 2.3% lower over the past 3 months. Now let's get into Sydney. House prices fell 0.3% in Sydney this month and fell 0.5% last month. Over the past 3 months, Sydney house prices have fallen around 1.7% and they're down just over 3% since March. Apartments continue to fall faster in Sydney though, where apartment and unit values were down 0.5% to be down 1.5% over the quarter. And prices have continued to rise in Darwin. Darwin prices are now starting to boom. It's up 1.6% over September. It went up 1% last month. And I think that's because house prices are a lot more affordable and there haven't been as many cases in Northern Territory. And now we're starting to see Perth have a comeback. With Perth prices were up 0.2% in September. And I have heard from a lot of my viewers, they're saying that they've seen the market start to go nuts in Perth, especially with all the first home buyer grants and the home builder grants in the new housing market. Canberra continues to rise, up 0.4% this month. Hobart continues to be a strong performing market, up 0.4% in September. So we are starting to see things slowly pick up in Hobart again. It was one of the best performing markets over the past 2 years. So we'll have to continue to watch Hobart. And South Australia continues to be a strong performer. Even when prices were declining in Melbourne and Sydney, prices were still rising in South Australia. And South Australia is up 0.8% this month. And for all my viewers in Brisbane, the market there is starting to pick up. And I have heard a lot of people saying in Queensland, the market's been very strong and house prices did rise 0.5% in September. But what you have to remember is the property market isn't just one market. There's the upper end of the market and there's the lower end of the market. Over the past 3 months in Melbourne, the lower end of the market dropped just 1.9%, while the upper end of the market has fallen 4.6%. In Sydney, the upper end of the market fell 2.6%, while the lower end of the market fell just 0.4%. So this is why you continue to have to monitor your own suburb, not just believe the headlines because they're just averages. Get out there in your market, go to open inspections, track the amounts of listings in your area. If listings are rising, you can expect prices may fall. Where there's tight supply in your market, prices may increase. Head of research at CoreLogic, Mr. Tim Lawless, said that the reason why the market is performing strong in some markets is on average across the country, listings are actually down 22%. So you may now be thinking, okay, we're past the worst of it. House prices are going to boom in 2021. I'll go over how they could boom and I'll also go over how they could crash in 2021. Let's get into it. All the issues that started in March haven't been felt yet. The government has been throwing money at people right, left, front and center. Interest rates have been lowered. There's been eviction bans. Companies can trade while insolvent, which is crazy. All these companies that are trading insolvent are now going to affect the good companies. There's been a huge amount of issues, but they've just been covered up. I'm going to tell you the other side of the story that none of the mainstream media is saying. I went through Australian Financial Review, the Sydney Morning Herald, the ABC, the News Daily, Yahoo Finance. All of them were towards the positive. All the mainstream media have a conflict of interest to spook the market. I'm now going to tell you the other side of the story, but I will also agree on some of the things they've got to say. Okay, the biggest reason house prices could boom now and through 2021 is Low interest rates and responsible lending laws acts. That's the biggest reason. Look what happened in the US in 2007 when the banks were just giving loans to anybody, when interest rates were lowered. This is the biggest reason, and this is the reason why house prices really boom is credit. Because if you can't get a loan, you can't buy a house. And this is why we saw in, the Banking Royal Commission, house prices plummeted in Sydney and Melbourne because the banks weren't giving loans, or they made it extremely hard to get a loans. So low interest rates and easy credit is the main driver for house price growth. For example, if you got a mortgage of $400,000 at an interest rate of 3%, your repayment will be around $1,680 a month. But if your interest rate, and if the RBA does cut interest rates in November to 0.1%, and we could see the lowest interest rate on the market drop to 1.75%, you could borrow an extra $75,000 and your mortgage repayment would only go up about $10 a month. So this is the real reason house prices can rise, is by lowering interest rates, because then the everyday Australian, the bank will tell them, oh, all of a sudden you can borrow an extra 15 to 20% more. And that means they've got an extra 15 to 20% more money when there's an auction, or when they're in trying to bid up a house price. They've got more money to go put up house prices, and this is why house prices rise. Also, something that the mainstream media is not talking about is, I know a lot of people and a lot of couples that took up to 40K combined. So one partner could take out 20K, the other one could take out 20K. All of a sudden they've got 40K for a deposit. Now the banks at first were saying, no, we're not going to lend you because you're in hardship. But I've been speaking to some brokers. There are some banks that were lending with people taking out their super. And also, after that money's been in your account 3 to 6 months, the bank will turn a blind eye to it because it's been sitting there, and it then be turns as genuine savings. So now all of a sudden, all these people that didn't have the discipline to save, they've now got enough money for, say, a 5 to 10% deposit on a property worth $500,000 to $600,000. Plus they've probably got their tax return. They haven't been gone on holidays. They've been locked up, so maybe they haven't been spending as much money. So now all of a sudden, all these young Australians that couldn't save before have been able to save, a decent deposit, not a great deposit. You normally should have 20%. But with the Scott Morrison 5% deposit scheme for first home buyers, all of a sudden they have a deposit and they can actually buy a home right now if it's worth under $600,000. And also the Morrison government announced this home builder scheme, and of course they say, oh, this is to help out the first home buyers, but that's a complete lie. It's to drive house prices, and it's to create jobs in the construction sector, which is good for people that work in construction. But every time they'll say, okay, we'll give you 25K, what happens? The developer puts up land prices and the builders put up construction costs, and it doesn't help out first home buyers, and it just makes the housing market more unaffordable. If they really wanted to help first home buyers, they would take all these schemes away, let the lower end of the market become cheaper, and the upper end of the market, if people got money to buy them, that's all good. But they need to have an affordable entry point for first home buyers, not just keep putting up the lower end of the market, because we're seeing prices aren't falling, and in some cases rising in the lower end of the market, making it more unaffordable for young Australians. And Finder put out a survey where they survey customers if they think now is a good time to buy. In April, it plummeted to 42%, and now it's back up to 59%. So, confidence is starting to rise. It's still, not very good, but we'll have to continue to monitor confidence, because the market is all about confidence. Now I'm about to get into the huge cons, because there are huge problems in the economy right now. The government covered it up. They haven't fixed anything. They just throw all money at it, and this money does have to find a home. Okay, so number one, why house prices could fall, and that is JobSeeker and JobKeeper being removed. So people aren't going to have as much money to spend in the economy. And what you have to know about the economy, one person's spending is another person's income. So if people don't have enough money to spend, that's going to affect other parts of the economy, and then those people aren't going to get enough work and will lose jobs. Another huge risk, and what I think is crazy, is the government are letting these zombie companies trade while insolvent. So there are going to be some dodgy companies out there that go and just rack up all these debts, grow up and spend all this money, and then they just go insolvent, and then that's going to affect the good businesses. So we don't know how, this has never happened before. I can't believe it. I'm speechless. I don't even know what to say. They're letting companies trade while insolvent. It's crazy. And this is going to have an effect on the economy later. It's going to affect good companies, like I said. It's just insane. Another con is in the inner city market, and regional market rents are booming because a lot of people are wanting to get out of the cities. But, in apartments and inner city markets, in expensive parts of the market, rents are lowering. So that means investors aren't going to be able to borrow as much, or they may say, look, the yield is not good enough on this investment. I'm not getting enough returns. So investors may not want to buy properties when rents are falling. And for example, if the rent's advertised for $100 a week now, if that then all of a sudden drops to, when they buy the property and then it drops to $260, then if they're negatively gearing the property, all of a sudden they may not have enough cash flow. Another huge risk right now is mortgage holidays. I don't know how the banks are gonna, handle this. Are they just gonna extend and pretend forever? Could they just keep kicking this can down the road? Does the road ever end? Do you think they will extend it again in March? Or are the banks gonna have to start getting some returns for their shareholders, and will they start telling customers, nah, look, you can't pay, unfortunately you're gonna have to sell? And I did watch an episode on YouTube called Heiser Says, where he had one of his viewers start getting a letter from AMP where they started to demand payment. Remember, all it takes is a couple of forced sales in a street or your suburb to affect your property value, because a valuer will go and look at the past properties that have been sold, what price they sold for when they value your property. Something they're also not talking about, and what's been, a huge contributor to the Melbourne and Sydney property market, is immigration. Immigration has been halted, so all these, new developments that are coming onto the market, there may not be enough immigration to fill these vacancies. But I'm sure once the borders do open, I don't know when they'll open, they will flood us with new immigration. They've been saying they want to create a Welcome to Australia campaign. So I'm sure they're really going to pump the numbers in, because that's the only reason we've avoided a recession over the past 30 years is because of mass immigration. Those are just the many pros and cons. What's going to affect the market? What will win? Will the low interest rates and easy lending win? Or will all these risks in the economy outweigh that? We've got two forces counteracting each other right now, and we have to continue to monitor and watch to see what's going to win. Because normally easy lending and stuff does boom the market, but we've still got huge risk in the economy that's been covered up. And eventually we do have to face the music. It may not happen now, may not happen next year, but what will they do if another, black swan event hits or another financial crisis hits? What will the government do when they've already lowered interest rates, when they've already printed trillions of dollars? Will there be mass debt forgiveness? Will the Reserve Bank buy all these bad loans? Will there be, the Reserve Banks are now talking about creating a digital currency? Who knows? But there definitely is never been so much uncertainty in the market right now. So we continue to have to stay up to date. I'll keep you up to date and informed on the latest. So what do you think will happen to the market? Let me know down below. I love chatting with you guys and getting your thoughts on what you think will happen to the market. For all my loyal viewers and subscribers that are still watching, thank you. You're awesome. I'm loving this journey on YouTube. I'm loving talking about what's happening in the Australian economy with all of you. If you haven't already, smash the like button for the holy YouTube algorithm. It really helps out the channel a lot. If you haven't already, because according to my analytics, 70% of you watching haven't subscribed, subscribe now. I'll keep you all informed and up to date on the latest that's happening in the market and the economy, and I'll be there to guide you. I do want to bring out some more informative content, so subscribe now, and of course, I'll see you in the next video.